Greetings of the day. Today in this video lecture of Business Finance Second for 6th semester, we will start with the new topic for unit number 2, that would be stock exchange. One time or other, as a student of commerce, we may have heard the term stock exchange, or we may know the term what is stock exchange. Some might have a great detail about the stock exchange, and some have somewhere heard about stock exchange and its functioning. Today we will discuss in this video lecture in detail what is stock exchange, its introduction, what are the various functions which are being performed by the stock exchange, what is the role of stock exchange. All these kind of things would be discussed today in this video lecture. So let's start with the between buyers and sellers. It means that both buyer and seller came into a central place known as stock exchange, and they can have their transaction, or they can exchange their stocks or any other security, not particularly for shares. They can exchange any security, but the criteria is what? First thing is that the company or the anything, either it is an investor, it should be registered with the stock exchange via their brokers or any other thing or any other intermediary. Normally in stock market, we have to transact with the help of intermediaries. Usually these intermediaries are the brokers or any other intermediaries who are the participant in the stock market, helps us to have our dealing into the stock market. Now moving to the definition of the stock market. Under the Securities Contract Regulation Act 1956, the term stock exchange is defined as an association or organization or a body of individuals whether incorporated or not established for the purpose of assisting, regulating, controlling the business in buying, selling and dealing in the security. It means that we have covered all the aspects with regard to definition. It can be an association, organization and body of whom? Individuals. It can be incorporated, cannot be incorporated. For what purpose? It is established for the purpose of buying, selling and dealing in the securities. Or we can have a simple straight definition which we can easily understood, is that a stock exchange is an organized market where second-hand securities that has been listed thereon may be bought and sold in a safe, quick and convenient manner. So I would break down this definition into several parts. First would be, it is an organized market. We have said that organized market, I would mark it for you. It is what we have said, it is an organized market for which kind of securities? For second hand securities. Which securities? Which are been listed thereon, which are already been listed. And what can be done? Bought and sold. How it can be bought and sold? Safe, quick and convenient manner. How this can be possible? This can be only possible if there are certain rules and regulations. A market is only get organized when there are certain rules and regulations. First thing, that is where, as there are rules, there is environment is safe, and as there is an organization properly in the market, hence the transaction can be executed in quick and convenient manner. Second thing is that which securities are traded in the stock market or stock exchange? Those securities which are second-hand securities. Second-hand securities means it is been already, IPO has been already listed into the market. Those securities can be bought or sold into the stock market. This is what is the definition of stock market, which we can easily remember. Organized market where second-hand securities are being listed, are being traded. They have to be listed. We can bought and sold in a quick, easy and safe manner. 5 points which defines the stock market: organized, second-hand securities, bought and sold, listed and quick, safe and convenient manner. Now moving to the next portion, that are what are the features, common features of the stock market, which almost all these things we have discussed in the definition. First thing, it is a market for second-hand securities. In the stock market, all the securities which are already been issued, that is after IPO, they came into the stock exchange for the purpose of trading. Why there is need of stock exchange? If suppose you are an investor who has purchased the IPO of certain company, but now due to some issues you want to resell your investment so that you could have that liquidity, or you want to change your investment portfolio. At that time, where you can sell this security, you would need a marketplace where you can find out a perfect buyer who would purchase your security. So stock exchange act as an that place where these securities, second-hand securities, can be exchanged or traded. That is the very first feature. Second thing, it allows dealing only in the listed securities. Then what is the definition of listed securities? Those securities which are been already registered, or those companies which are already been registered into the stock exchange, or whose price are visible into the stock exchange criteria, are only allowed to deal. If suppose a company which is not listed into the stock exchange cannot sell their securities into the stock exchange. That is what is the definition of the listed securities. That is what is the another feature. If an unlisted company went to stock market for the purpose of reselling or second hand for the purpose of transacting their securities, they cannot do so until unless they are not listed. So another big thing, which a great feature, is that the security should be listed. What we have marked here, second hand security should be there. Then what is the next thing is the organized market. If stock exchange is an organized market, how we can say that it is an organized market? Because it is run by the certain rules and regulations. There are certain code of conduct, which regulations which everyone into the market, whether it is an investor, whether it is an financial intermediary, company, or any other authority would be person would be there, they have to follow that code of conduct and rules. After only that they can trade or they can exchange into the market. That is how, or that is why it is known as organized market for dealing in securities. Then what is the last feature? It can be the part for only authorized member. Those who are registered with the stock exchanges can only go there and trade there, whether it is broker, whether it is investor, or any other person. Unauthorized member are not able to transact in the security market directly. If someone is been banned in particular stock market, he or she or that particular company or organization cannot trade into that market for X number of period, or for whatever time frame which has been fixed by that particular stock exchange or the respective component authority. These are the features of stock market. Moving to the next segment is the role of stock market. So what is the role of stock market? Why the stock market has been there? The very first role is ready and safe market. As an investor, I immediately needs fund, whether I am an individual or I am an organization. If I want to sell my what we can say fund investment, I want a market where I can go and safely sell my investment to particular investors who are also ready to buy my investment. So stock market provides the platform where I can readily find the investor who are willing to buy my securities, and in a safe manner. So because bulk amount of financial transactions are there, that is why it is quite necessary to have this safe market where there is greater safety into the mind of investor. That is what is provided by the stock market. Very first role. Second is the mobilization of saving. We have discussed it into the prior lectures also, that it is quite important that there should be mobilization of the savings of the small investors also, because they can be put to the greater use or more productive use. How this can be done? This can be done by the way of stock market, because in stock market or small investors pools their money, invest into the various stocks, and that stock or that company raise the capital for the purpose of what? For the purpose of more productive use of that savings or that money. Third rule is on wider avenues of investment. When we go to stock exchange, or when we see what are the products or what are the securities which are offered in stock exchange, there is quite variety of services. If we see into the particular paradigm in the other avenues, there are only few securities which are available with us. For example, we can go to post office. There are few securities in post office. Then we into the bank. there is FD, RD, all that product is available. In insurance, it is just risk averting, what we can say, an instrument. It is not a kind of investment. But when we go to stock exchange, there are n number of options. There are shares, debentures, bond, treasury bill, money market instruments, commercial papers, then we can say, or gold, silver, bullions, like these various metals are available there. In commodities market, there are again various kind of things. We can go to the OTC there, that is over the counter exchange of India. There are another futures options. All these kind of things which are available are in the stock market, which provides a variety of avenues to the investor for the purpose of investing their money, in which they can find it fit. This is another thing which we can find in stock market. Next is the evaluation of the security. When we say about the evaluation of the security, that is the valuation of security. Securities can came into the stock market by way of the demand and supply. What we have studied, the law of demand that works in the stock market. Whatever the demand of the particular share of an company is, that determines the price of that security, or valuation of their security. Greater the demand, greater the price, as according to the supply, and vice versa. That is what another thing we can know the value of our securities. Then capital formation. One of the important thing in the finance is that capital formation. When money is idle in your pocket or in your bank account, it is not used for any kind of productive use. And for business, money is required in form of capital, what we have studied, and that capital can be brought from the stock exchanges. How stock exchanges? Because these money which company raised through primary market, and then that stock is transferred to what we can say secondary market. At that point of time, capital formation process has been started, because the money which a person has utilized for the purpose of raising an IPO, raising funds, investing funds in an IPO, is a process of capital formation for the company. So stock market acts as an agency for capital formation, because stock market is involved in the particular process of what we can say issuing securities. We, in the further part of this segment, we will see how in listing process a company needs to register with an stock exchange so that they can trade with their securities. That is another thing. Next role is of the qualitative, industrial and commercial development. A country or a nation is having a great industrial and commercial development can be known through stock market. How we can say that? Take an example of our own Indian stock market. Just few days back, we have heard that the Indian stock market is going to more flourishing in the coming decade. According to one report, Indian stock market can reach above 1 lakh within 10 years. That is what is showing the industrial and commercial development in the country. And when a stock which is been valued according to demand and supply, along with that other criteria are also there, like what is the earnings, what is the level of development in that particular company. All these things shows the qualitative parameter regarding to the development of the particular industry. That is another role. Next is it acts as a barometer, that is an what we can say measuring scale of the company and economy. If suppose stock prices are continuously declining, it means that the company is suffering somewhere. There is not good thing with that particular stock. That is what is the barometer. For example, in last year March 2020, we have seen that there was a great fall into the stock exchanges. Almost all stocks were hit very badly. It was acting as a barometer for the company, because there was a lockdown, hence there was a negative sentiment, hence everyone was pulling back their money. That is why the stock exchange fall to a great level of 25,000. Now we can see that it has reached above 50,000. That is what is the difference which we need to understand. Similarly, it also shows the how our economy is going towards it. If suppose stock exchanges now right now, for example, is on 51,000, then we can say that it would decrease, or it would have the negative impact. If suppose it gets flourished, it means we have a great economy working on us. Today we can see that stock exchange is nearly 52,000. Even after the lockdown, it means that our stock exchange is working in the positive area sentiments. It means that our national economy is having a great prospect in future. That is what is another thing. Next, control over company management. By way of stock exchanges, we can establish a proper control over the company's management. So the companies which are listed on the stock exchanges has been under direct control of the stock market. The company's management cannot run by their own will because they are listed with stock exchanges. They are continuously in the purview or in the vigilance of the, what we can say, uh, SEBI or stock exchanges. In the recent past, a company has been found with the insider trading. Immediately SEBI and stock exchange has taken action on the respective culprits and strict punishment were given to them. That is how the stock exchanges control the listed companies, because they are listed with stock exchanges, hence they are also accountable for proper management of the company. Next is providing liquidity to the investment. How stock exchanges provided liquidity to investment? Suppose that as an investor I have invested in certain kind of securities, shares of a company. If I want to liquidate it, if I want to money or funds, because I am need of funds for certain purposes, at that time I can go to the stock market, secondary market, and perfectly sell my security to the person who is willing to buy my security at a respective rate according to our mutual consent. And in this way stock exchanges provides liquidity. Then wider marketability to the securities. As in the stock exchanges and central marketplace, large number of buyers and sellers gather together and can easily sell or purchase the securities which they will. And today, as all the platform, as we have discussed in the earlier segment, that SEBI has made it on the online thing. That means that we don't need to have the presence there. We can easily sell anything into the sell any investment or security into the stock exchanges very easily. Then last one is the provides funds for the development purpose. Even though government also intervene into the stock market for the purpose of raising funds for developmental purpose. These funds are again subscribed by the investors who are acting as who acts in the stock market, or who acts through brokers into the stock market or financial intermediaries. So in this way, the role of stock market is quite important in each and every nation or country. And that is why we see that stock exchanges have very vital thing and considered very important in the financial world. This is it for this lecture. In the next lecture, we will see the further part of stock market. Till then, stay tuned. Thank you.